A very good morning to you. How are you? Happy Monday, Ronnie.
Thank you very much, Rich. Happy to be here. No better way to start the week, right?
Have you been on with the new intro video yet?
No, but I hear the groovy intro music in my ears.
It's great, isn't it? We can almost go right to a coming up slide.
Just dive in.
I think, because we got the music going, so let's keep the music going for coming up. Right, oh no, then it stops. Here we go. Right, at 8 a.m. this morning, we have the opening bell with myself and Ronnie. It's a big show today, Ronnie. Big show. This is our best show yet, I think. 20 past 8, we're going to do some fast markets. 8:30, live from the trade desk with Angeline and Matt Arbour. But then we are going into Power Hour, people.
Oh, Power Hour starts when I leave.
We have a Power Hour as soon as Ronnie walks out this door. 9 a.m. We've got the CFO of IG Group coming in, Clifford Abrahams, going to talk to us about markets, about earnings season, and where he sees the economy at the moment. Then 9:25, he's in. Friday morning, the man called it. You saw me take a live phone call from Nick Feingold, told you that Tesla was going to squeeze, and it finished up 8% on Friday. Well done, Nick Feingold. We've got him coming in today to talk all about that call and embedded AI. Then trade the week at 9:45 with Axel and Technically Speaking, where you can put all your questions in. That's a packed show, isn't it?
I mean, it is packed with high-quality content.
You know what? So sometimes I look at Steve Sedgwick and go, "You are the man. You're God." But I don't think even Sedgwick has that lineup today.
I mean, that's how when I come in the morning, first I see Luke Moore, and I was like, oh, God. And then I see you, and I'm like, you know what? Mortal.
How are you, Mr. Average?
Oh, I am actually brilliant because my beloved team, Liverpool, became English champions yesterday.
The things that I miss. Did they really?
They did become champions at the expense of Tottenham.
What was the score?
5-1.
Ooh.
Boys against men.
I don't think I've got any players of my fantasy team. Monkey Man, have we seen Monkey Man this morning? My goodness.
Yeah,
let's go over to the chat.
He's up there at the top. Morning, you apes.
Are you sure?
Yeah.
Good morning, everybody. Good morning, Kirky. I don't remember a Kirky before. Kirky, apologies if you've been in here before, but very welcome if it's your first time. Jesse14, Waka Waka, what's up, Waka Waka? Why do you need to get out of the UK? We saw that comment first thing. Cam before the storm. There he is, Monkey Man, good stuff. Boise in here. Boise knows what's coming up today. Chatting to Boise over the weekend. Frosty. Frosty thinks you're wearing makeup, does that say?
Make it up, Ronnie.
I thought you said Ronnie's wearing makeup.
Frosty's got it out for me, but you know what? It's all good because I love Frosty.
And RK, that is a great segue, RK. Big show today, but also big earnings week. That's right. Let's take a look at this economic calendar because this week's got everything packed into it. We've got coming up on Tuesday the jolts, right? So have become market movement over the past.
Do you want to let us know what JOLT stands for?
Ooh, job opening. Is it long term? I don't know what the LT is. Job openings and.
I don't know. I'm asking you, mate.
When you're tapping away your keyboard.
Okay, job openings and labor turnover survey.
Labor turnover survey. Okay, there we go. Estimated at 7.4. Core PCE. What does that stand for, Ronnie? PCE?
Public consumer estimate.
Come on. It's one of the main numbers. Core PCE month-to-month estimate 0.1%.
What does it stand for?
ISM?
Why don't you answer that?
Right. Okay, let's go through this quickly. So ISM 47.2. Then on Friday you've got non-farm payrolls, right? So we've got inflation Wednesday, ISM Thursday, non-farms Friday. But I was doing a count up of what we've got in today's show. Chart off, thanks guys. So today's show, right? We've got Clifford, we've got Nick Feingold, we've got Matt Arbour Those three guys have been in the market for between 30 and 40 years, right?
I know where this is going.
Angelina's been in the market for a good 20 years. Myself, X, we've almost got 200 years of expertise on today's show. In fact, I counted that up yesterday, and we got 30 years Matt Arbour, Nick Feingold 40, Clifford 40, myself 29, Angeline 20. It comes to 199 years and 6 months. And I was thinking, can we say we've got 200 years of expertise on the show? And I couldn't think of anybody else that's got any expertise on this show.
Me neither. Anyhow, happy to have you here, Rich. Nice of you to sugarcoat that number down to 29. If we're being honest, it's probably close to 40 there as well.
96. Yeah. Oh my goodness, right. Okay, we have a lot to talk about this morning because, well, let's go into overnight action first of all. I've missed the good one, people. I apologize. I have missed a proper breaking story. Let's go into overnight action. Now, about 3 weeks ago, there were 5 men in suits in our reception area, right? And 2 of them had briefcases. And I was thinking, that's not normal. I mean, I've been coming in here for about 7-8 months, and I've never seen the suits, right? I'd expect to see them in Goldman, Credit Suisse.
Are you invited there?
Or I sometimes go in to use the cafe at Deutsche Bank. It's a good cafe, actually. Try it. Deutsche Bank reception, best cafe in town. But not in our reception. I did not expect to see 5 men in suits. And I knew they hadn't come out of our office. Friday night, DoorDash, 2.7 billion bids for Deliveroo. Deliveroo are in the office downstairs from us. And that was it. Right there and then, those American suits in the office were in to talk about the bid.
Well, luckily, as Rich is a professional filled with a strong moral and ethic code, he refused to act on information that is not public knowledge and available to all.
I tried to listen to their conversation as they were
I'm
leaving.
trying to help you here, mate.
I was full of, there's revolving doors and we were walking out the doors.
Rich went 6 slaps around the revolving door.
And they went to stand out in the street and then they started walking up towards Cannon Street and I was walking at a slower pace to try and listen to their conversation and I couldn't get anything. I cannot believe that now they've been bid for. So it's a £1.80 bid, and it was broken by Betaville on Friday, but not during hours. It was after hours. So the stock's hardly moved. Shall we have a look at where it is? I mean, it's one of the most shocking performances since its IPO.
Yeah, it's been. I think for me it was quite. The most surprising thing is how long it took for someone to get an offer in for Deliveroo, because since their IPO they've just been going straight downwards. They've been sort of undervalued, but according to some. But there is a strong concentration in the food delivery market with the Postmates, Deliveroo, DoorDash, Delivery Hero, Just Eat, who's now being consolidated by Delivery Hero. So there's consolidation in the market. So I think this came as an effect as an effect on Just Eat being acquired by Delivery Hero.
So the IPO came at £3.90, right? Which let me see if I can zoom in on this a little bit. The IPO came at £3.90, which was up around here. It dropped 25% on its first day. Not usually a great sign for IPOs. It tried to get back up there in August 21, and then you can see that we are down at 146 we closed. Let's have a look at it more on the look at that. That's a decent rise. Mind you, that's probably just from the market sell-off, is it? Yeah, so we were there and thereabouts at the end of February, and it has had a decent rise in the last few weeks. Maybe some other people seeing suited men in receptions.
Do you think Do you think this is an offer that is acceptable to Deliveroo, or do you think they'll come back or counter with a higher? Because what was the actual premium they came in? They all actually
23%, 24%.
yeah, because they came in at 180, right?
Yeah.
Do you think they'll try to push it up to 200, a nice round number, or do you think they'll settle for 180?
So the surprising thing was Claudia Arney, she's the head of the board. She came out and said that they would be minded to recommend the deal. So this goes back to, they had actually made an offer, DoorDash had bid for Deliveroo behind the scenes,
Right.
with a lower price.
When was this?
A few months ago.
Okay, so but it was non-public knowledge. It wasn't.
Exactly.
Okay.
It hadn't been disclosed. So I assume that must have been when they were down in the sort of 120s, maybe here at 130. So there was already a bid there, and they've already walked them up to 180. But I don't think you can give this thing away for 180.
You think it's undervalued at 180?
Yeah, I'm interested here. Andrew McKelvey, do we have an Andrew McKelvey in the house? Do we think, let's put a poll out there actually, producer Phil. Do we think there will be other bidders come out? Will this turn into a bidding war? Will there be other bidders? You could have Amazon, right? Amazon actually hold 13% of Deliveroo.
Amazon is an option. Uber is an option. But
I hadn't thought about Uber actually. I don't know if that would get past the competition.
Well, probably if they go for Deliveroo, they'll have to forget about Expedia. Probably too much.
I don't think. Yeah.
Yeah, exactly. Okay.
Right. So the question is, will this drag other bidders out of the woodwork? Will Deliveroo turn into a bidding war? Yes or no? Simple yes or no. And I don't know. It's a tricky one. I think it's a tricky one. So you could have Amazon. You could have Prosus, which is Naspers investment arm. So Prosus are the ones who bought your takeaway.com delivery.
The South African.
Just Eat. Yeah.
Yeah, but they're South African, right?
That's right, Naspers, yeah. So Naspers are the one that bought into Tencent originally.
Right, yeah.
Right. Geniuses. Yeah, so we've got a chance there. There's also a Hong Kong listing that could come in and get involved. But all these have got slightly... God, that was a quick... Why have we finished the poll after 30 seconds? Very good, producer Phil, very good. So it's 50-50 so far. Well, it's 2/3 now. And yeah, what if there is a bidding war, does this go for 3 billion? Because at the moment it's only 2.7.
And they did what? They recorded their first ever profit this year of what? 3 million?
Yeah.
3 million pounds?
So yeah, adjusted 3 million.
Yeah, adjusted 3 million. So effectively what you're buying here is you're buying up the competition and you're buying the market share rather than you're buying a profitable business more than anything. So I think, and you're most likely buying the staff, the engineers that they have on file there. Whoever hasn't come.
It's a great business.
Yeah, whoever hasn't come to IG yet, been poached by IG, they're...
Oh, that's right. Yeah, we stole their head of marketing, didn't we?
Yeah.
Shout out to Elise. Great steal there we've made from them.
Yeah, I'm sure. You're here. So anyways.
I never worked for Deliveroo, mate.
No? I figured like in between after Credit Suisse and Macquarie.
No, that was Uber. I was driving.
Driving Uber.
I was dog walking for a year and a half. Well, actually, I did advise on a sale of a similar business in New Zealand.
Oh, really?
So the Queenstown version of Deliveroo, a good friend of mine called Danny Sykes set it up with his girlfriend. And this was, they took over the Queenstown delivery food market.
How big is that market?
Well, 3 million tourists a year.
Blimey, but do tourists order takeout?
Yeah, of course they do. You get home from the ski slopes. You're in an accommodation that you don't want to make your own food.
Yeah, I'm really interesting. I'm sure that's what the viewers wanted to know this morning.
Anyway, so the problem with Amazon coming in, that's very tricky to get through the Competition Markets Authority. I would imagine process is the same. If you've bought Just Eat and you've got Delivery Hero, then what else is there? There's Uber Eats, obviously. But what other
Postmates.
Which one?
Postmates.
Oh, I don't know that one.
Also an American one. Could be a play to sort of, because they're not the biggest ones in the US. They're sort of third behind DoorDash and Uber Eats.
Right.
Could be an option for them to expand across.
But is there anybody in the UK that the competition markets would look at?
Not that I'm. That I'm aware.
I only order from Uber Eats or Deliveroo. I think Deliveroo is the premium food delivery, so therefore I think that the deal should also come at a premium. I don't think anybody should just let DoorDash come in and swoop it up on the first bid.
Well, it isn't the first bid. You know, like you said earlier.
First announced bid, you're right.
Yeah, first announced bid. But I'll see. I think it's going to be interesting to see how they actually go ahead about it. In my opinion, I don't think we'll settle at this price. I think we'll come up to at least 195.
195.
That's my take. And everyone knows I'm always right when I take my bets on this show.
There you go. Ronnie's a 195 bid. I think you're right. Dun, dun, dun.
Seriously?
I think you're right. Yeah. I was about to say, I wonder if it goes for £2. But no, I think you're right. 195.
Yeah.
Which means let's decide. The important thing to everybody here is, where does it open today?
I'll leave that one to you, mate.
Now, you've got a 180 bid on the table. You obviously have to take off the cost of funding. So cost of funding, it's going to be 6 months until you got your money. So it's at least a 3% cost of capital. So 180 minus 3%. It's not a firm deal, right? There's nothing firm on the table. So there's still 25% probability that it falls through. What's it go back to? 150? 155?
No, I think if it falls through, it'll go back to lower than what it previously was at. I think we'll come down to. It's now at what, 145? I think if it falls through, I think we'll go down even further down, 125 maybe.
Now, why? You just had an interest. They can come back in 6 months' time. I disagree with that. So I'm saying,
might pull John Wood Group here.
I'm saying 25% of 146, where it was, 25% of 174, which is the adjusted cost of capital bid. Maybe 25% of 185, 25% of 195. So all in all, that is. I should have thought about this before I started using tough math.
Okay, I got my calculator up here. What do we need?
190 is 175. So on my very basic back of the envelope math, it should open at 175 this morning.
Perfect. And
if it's lower than that, I will be buying it.
Excellent. And if you enjoy watching Rich do math in his head in the morning, please like and subscribe.
Look at that.
Please like and subscribe.
Back to the envelope.
And we'll see. And you can also see his notes where it says Ursula von der Leyen.
That's right, because we do have other news. Von der Leyen is meeting Trump.
Yes, that's actually exciting. I think that's something that the viewers at home actually want to hear about.
Mate, the company in our building is getting bid for, and you don't think that's exciting?
It is.
Move on.
It is exciting. It is exciting.
Anybody that wants to see the Times article, there it is. Will Shu set for 172 million payout. I don't know what he looks like, but if we see him in reception and he's on his way to the bar, then yeah, he's getting the first round.
I think he's of Asian heritage.
So there you go. Investors set to give their verdict on a 2.7 takeover by the larger rival. So that's one story. Let's look at the front page of the Times. This highlights the demand slump, and this was in a podcast I was listening to over the weekend as well. The ships coming into US ports that are booked for May fall off a cliff.
Yeah, substantially decreased. There was some sort of sort of front running of orders. We saw a big increase in the beginning when everyone tried to get the orders in before the actual tariffs came into place. But now they've actually just plummeted down. And you can see that that's taken a big hit on the shipping industry as a whole.
So this is what Ronnie's talking about here. The year-on-year change for April the 20th, the week of, was up 56%, right? That's obviously the front running. And then it starts to drop off significantly. April 27th, May the 4th be with you, was down 36%.
Do you think this will have an effect on sort of, if you look at actual sort of a stock that would have an effect of this, do we have any stocks in mind that would be affected by this beyond the obvious Maersk?
In shipping?
Yeah.
It's tough. So the price of a container from China has dropped 27%, right? But the price of a container from Vietnam has increased 14%.
Interesting.
Because you've obviously got a 90-day period that you're trying to
get everything in.
But it's still kicking the can down the road, isn't it? It's still getting everything done now. So the economics are going to look really tricky for the next 3 months.
And I'm not sure if this is how factual this is. I saw a blog post, so please take it with a pinch of salt, saying that Apple are now looking to move their entire iPhone manufacturing to India. From China.
Yeah, that was front page of FT, so I think.
Yeah, some small independent blog.
Yeah.
I read it on Reddit as well, so I have to admit.
It's entire for the phones that come into China.
Yeah.
Sorry, the phones that come into the US.
Yeah, it would be weird otherwise. Produce iPhones sold in China in India.
No. But for the rest of the world, it's fine, obviously.
Yeah.
So it's only 16% of their production.
Yeah.
Is being moved to India.
Yeah, that is something that I was listening to Deutsche Bank's chief economist this morning, and he was talking about how we can see a sort of increase in inter-European trade. So a larger European trade now, speaking of Ursula, because these tariffs, it's only to US, right? So people are going to look at replacements and where they can sell their products beyond the US. So we'll see more trades between Europe and US, so Europe and China, Europe and India. So there can be more sort of trade and growth in those aspects, taking that from American market shares.
I was also trying to think of where the US can source stuff from outside China, right? And Brazil actually makes a lot of shoes.
Shoes?
Yeah. So you get 80% of American shoes come from China.
Is Trump a big fan of Lula da Silva?
Well, no, that's fair, but there's only 10% tariff.
Yeah, I mean, that's a bigger signal more than anything.
They're actually very skilled shoemakers, and it's obviously a lot cheaper than Italy.
Yes.
So you've
good footballers.
So the winners, a country like Brazil wins a lot from this.
Absolutely. I think we're going to see a stronger collaboration between going back to the sort of America downwards to the LATAM countries.
Yep. Boise says China has become a more expensive place to manufacture in the last 10 years. That's right. That was Tim Cook's point as well, saying that, look, if you think that we bring stuff from China because of the cost of it, then you're completely wrong. It's the skill.
Yeah, absolutely. Yeah, though India is not as good at some parts. I mean, Foxconn and Foxconn may be a Taiwanese company, but they have locations in China, mainland China as well. But they've been producing electronics for such a long period of time. And we see there's been a shift from simple manufacturing has gone to cheaper countries, fashion, etc. Your M&S shirts, they're probably now made in Bangladesh, Vietnam, Cambodia, and
this one, mate.
Turkey.
Turkey, great
place for manufacturing. There's actually a lot of Syrian refugees because they took in 3 million Syrian refugees. So they have a lot of Syrian refugees working in those manufacturing Not well paid, I have to admit.
Oh, really?
But hey.
Paul Taylor, very good. Brazil, what a load of cobblers. Very clever. I like that. Now, have you ever, you're maybe a little bit young for this. Did you ever play the board game Ludo growing up?
I've been to Lidl, the German shopper, but Ludo I've not heard of.
Ludo, so Ludo. So our friend Maturin here has made a game which is like Ludo Premium.
Okay.
Or Ludo, you know, a better version of Ludo. So there we go. He is saying, and this, you know, this is really important. This is good for us to actually have somebody who on the chat who sources things from China. We've got box board games produced in China, and we've had to postpone our plans to sell into the US for obvious reasons. So that, you know, example there of that it is changing people's business decisions.
Absolutely, absolutely.
Yeah. Right, so we got to go to a quick 2-minute break, but we'd very much appreciate if you can hit that like button. That is going to be really useful for us because it's a big show today and we're very close to 500 subscribers. I think we can hit this today.
Yeah.
I think the combo of
down there.
Clifford Abrahams, Nick Feingold, Matt Arbour and Axel can get us to 500 subscribers.
And not me. I'm just here to fill the space, or
we'll take a 2-minute break. Delivery looking up 16%.
Boise likes me. At least Boise likes me.
Boise loves you. My mum loves you as well.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello and welcome back to Trade Live with IG. I am joined with the veteran who has over 40 years on his neck of experience, Rich McDonald here, and my name is Ronnie, young, fresh perspective.
Right, we're going to run you through the upgrades and downgrades before the open. So Antofagasta has been raised at Peel Hunt. The pullback creates an opportunity. We have got Fresnillo price target raised to £14.50 at JP Morgan from £10.
Surprising.
That's quite a big one. Inchcape cut to neutral at BNP Exane. Munich Re cut to hold at HSBC. Hanover Re cut to hold. And yeah, that's about it. There we go. Right, let's get off and running for this Monday morning. Ronnie, thinking he's at the London Stock Exchange there opening.
We're still waiting for their sponsorship, by the way.
Yeah, give us a call, London Stock Exchange, if you're listening. Right, first of all, we're seeing Scottish mortgage investment. The Nasdaq had a good rally on Friday night. Therefore, you're seeing Scottish mortgage up 60 basis points. EasyJet climbing through the clouds, up 50 basis points. What else you seen, Ronaldo?
Oh, Rolls-Royce, they're giving back some of the gains they had on Friday. They had a really good day on Friday, so they're giving back some of the gains there. Nothing that jumps out. Oh, Canal Plus.
Why is Canal Plus so strong?
And ITV. Interesting, the medias.
Producer Phil going to check to see if Canal Plus have had numbers for us. ABF up 1.3%. Ronnie must have been in pre-marché over the weekend.
Always. And then we got WH Smith, not to be confused with just Smith Industries.
It's looking low, isn't it?
It is looking low. I'm not super bullish on them. But Scottish Mortgage Investment Trust, it's a company that both I and Luke Moore love due to the diversification.
I bought them on Friday at £9.
Up to Scots. What else do we see here? Entain up slightly. Legal in general, slightly 0.5%. NatWest, 0.36. Nothing to write home about.
Right, shall we have a look at the losers? What have we got? Have we got any? Yeah, there we go. Yeah, Standard Chartered, small off.
Standard Chartered, Mark Spencer, you need to buy some more shirts, mate.
Now, Marks and Spencer's is having a shocker. So this came out on Friday, and let me just see if I can get an update on this, because they've got a problem with,
online orders.
Online orders, saying that online orders have been suspended. Have we got an update on that this morning?
Yes. So Marks and Spencer's were a victim of a reported cyber attack.
Really?
Yeah.
There we go. So that was on Friday afternoon, right? That's not this morning. That's Friday afternoon. M&S said it's working to restore online operations. The stock had fallen quite a lot. It was almost down 9% over the couple of days that this was going on.
Yeah, the North Korean hackers are ruthless nowadays, even going after Rich and his shirt purchases.
No, this was food, was it? Was it all? Anyway, that's Marks and Sparks. You see them, they have bounced up to 383 on Friday, but they are down 70 basis points this morning. So, right, we've got another 90 seconds until Deliveroo opens. Where are they looking, Ronnie?
They're indicating up 16%.
At?
170.
170, right. I have a buy order in. I'm not going to tell you. I know Monkey Man will front run me. So,
and my source of this is Luke Moore.
Okay, so it's not a live price.
Well, he texted in the chat saying they're indicating up 16%. So, if anyone has any issues with it, please take it up with Luke Moore.
Come on, we need level 2 in here on an open. A big open like this for Deliveroo. Are DoorDash going to be the only bidder, and are they going to get them at their first announced bid? Or are they not going to?
We say no.
I doubt they will get it on their first bid. But the poll said 50-50. So, right, Diageo up 1.6%, back to 21 quid.
I know you're a big fan of Diageo. So is my beloved manager, Tom Roberts. But I'm not a firm believer in them.
No, you're not a drinker, are you?
I'm not a drinker. I'm a lover.
Right, we won't ask about your weekend then. So Mobico, we're getting asked by away from the numbers. I will have to add that to my sheet, but you didn't
All
get
right.
any better.
I just got L2 screenshot from Luke Moore,
yes,
indicating up 16.44 at 170.7.
Oof. I'm in with a 171
That's
top.
tingling for you,
I'm
Rich.
in at a 171 top to buy them.
Cumulative volume in the auction is 2,329,000.
Okay. Right, let's add that because they will be opening soon. Deliveroo, what do we think the right price is? By my reckoning, which was very much back of the envelope, then I think they closed today at 175. However, that is me attributing a 50% chance of a higher bid coming.
I'm with you there, pal.
So
if you're wrong, we're wrong together.
Yes. Well, we're not really, because you don't have your demo account open.
I'm here in spirit, mate. Does that count for nothing? Moral support?
Doesn't count if I lose money, does it?
Oh, there
right,
we go.
There they are open. 170. Oh, I've missed it. I've missed it by a penny. Did I get them? Oh no, I've got them.
You're
I
filled.
got them. Yeah, filled. So it must have uncrossed it at 170 point. Right, so I am now the proud owner of 5,000 shares of Deliveroo.
171, 172. Oh, we keep going up.
I think. Oh, I haven't bought enough, have I? That's what my old boss used to say. If you did well, if you bought if you made a good trade, right, and you made like $50,000, $100,000 for the bank.
Yeah.
Why didn't we do it in 10 times the size?
Did he say that about your losers as well?
No, exactly. No, I can't remember what he said about those. Right, there's a chance. I am in at 168 as well, though. Pete Ward's got a couple of bids in for me. So, right, let's catch up in Europe. What have we got going on in Europe this morning, Ronnie?
We got Weirich Motorenwerke, aka BMW, indicating up 1.18. Mercedes-Benz also up 1.48. So it's a good day. And Porsche, Volkswagen, all of them up. It's a good day for the German automakers.
This is on Ursula meeting Donald.
Ursula, she's not German, is she?
Right, Airbus up 1.6, Volkswagen. There is Kering. Kering continues to recover. That's going to be, I am going to talk about this for months. Why didn't I buy them when they were down 5% on numbers?
Well, we're yet to see. I don't think...
When we realized what the market cap was, that it was only $18 billion or euros.
I think we haven't seen the worst of Kering.
Really?
Yeah.
Right, I'm going to put a...
Rich actually has reverse Ronnie indicator at home. So whatever I say, he does the opposite.
165. I'm going to put an alert in. So price level 165. Ronnie says we hadn't seen low. There we go. Right.
I'm actually I'm blushing a bit now. Great Rich McDonald. He knows my name.
Where's have we got Deliveroo on the list? No. Oh, yeah, there it is. Right. So yeah, it's I think during the day it might go slightly higher, but you can see, if anybody's wondering why is it not at 180 when the bid is at 180, well, A, it's not a firm bid, so there's a chance that they walk away. Are DoorDash going to walk away from buying the best UK delivery business? I doubt it.
I think the concern here for DoorDash is not so much in overpaying and not getting it. I think they're willing to go up. I think the biggest concern here is if one of their competitors get it. Because as we've established, this is a market in dire need of concentration because there's so many actors doing the same thing. So they will concentrate and they will sort of consolidate. So I think that the offer is yet to come up. And I think they're more concerned about someone else coming in and grabbing that rather than...
upwards pressure on the price.
Exactly.
Yeah. So there's a chance it doesn't happen at all, which Ronnie and I think is unlikely. But there's also you got to take the cost of capital, right? So if this, I mean, I say 6 months, but these things can be even longer, right? So let's say it's 9 months, cost of capital annualized 5%. So that's 3.2%. So, or 3.3. So 180 minus 3.3% is 175. I think they should be at 175. I mean, it's not much, right? It's two. You're talking about an additional 2% when it's up 16 already.
Yeah, I think there's more to come, as we said. But just a little side note. We were talking about the German automakers.
Yeah.
One automaker that's done really, really well in the market
Good.
is
Ferrari.
no, Japan, Toyota Motor Corporation, because they are reporting of spinning off their industrial for $42 billion, with a lot of private equity interest that's looking into it.
So that was just, yeah, look at that. There we go. So that's right. Producer Phil did have that on our overnight news that you see before the...
This is for Producer Phil.
So, yeah, so interesting, but they're only back to where they were before all the tariff news. So, yeah, Toyota now higher than when the tariffs were announced.
Yeah.
That's interesting.
They're spinning off, becoming leaner. It's going to be really interesting to see what they do.
Lean and mean, just like yourself.
Oh, wow. Someone woke up on the right side. I think it was the threat of me having Producer Phil putting a camera on the back of his head that really got him to calm down.
Like a cat. Right, we've got... let's have a look at commodities and foreign exchange. Run us through what you're seeing there. Gold going lower this morning, Ronnie.
Gold is going lower. I think it's more slightly so that it's sort of a pullback. I think we saw gold sort of a flight to quality after we saw the bond yields going up. The gold was sort of the only safe haven. We reached 3,500. I think a lot of people took profit there, and also we see a little bit more sort of calming and rationale in the markets in terms of the tariffs and how we're moving in that space. So I think gold is sort of coming back a little bit from taking profit and calmer macro environments.
Let's talk about this from where you can actually give some value at. What is the mood on the desk like? Because obviously we all had the shock, right? And I knew that I've definitely drawn away from taking risk, but I'm starting to feel that comfort again, right? As the VIX has dropped, what's it like on the desk? Are you seeing people start to come in and take risk again? Did they ever disappear? Was there a lull?
Yeah, so it was a big sort of drop off in terms of client sentiment in terms of bullishness. Mm-hmm. I think we had a very, very bullish period leading up, to Trump's tariffs. I think those who didn't take off risk from the table leading up to the tariffs, they came to regret it quite considerably. Yeah. I think now we're seeing sort of more of a pullback in terms of client behavior and risk taking. I think people are adjusting their sizes more than anything. Mm-hmm. So they're still trading the US tech, US tech, aka Nasdaq, the European indices, but I think people are adjusting their sizes and they're leaving a lot more margin to play with. Just in terms, yeah, exactly. Just in terms of which we can and most likely will see some sort of shock headline, because this is a headline-driven market. Yeah. So people are leaving more room for error there.
But so for the first time in a long time, we had 4 days of rally in a row, right? Yeah. 4 positive days on the S&P and the Nasdaq. So is this either Besant has now won the war internally against Navarro and Lutnick, and the White House is just talking a lot more market friendly, yeah, or it's a false sense of security, and we're coming, we might be peaking at 5,525.
That's the billion-dollar question, right? Mm-hmm. No one really knows what's going to come next. But if there's some sort of indication to anything, I think we've seen that Trump is not as firmly standing on his ground as he used to, as we thought that he was going to do. He blinked first in the trade war.
Yeah, and almost begging China.
He's almost begging China, and so is Besant doing. So I think people are coming to the realization that it was bluffing. He was trying to get out of the deal. And if he doesn't, and China won't budge, China are standing firm on the ground. So I think people are realizing that the biggest indicator now is the sort of bond market, and that is something that they pay close attention to. Not as much as they do the equity markets, but the bond markets is something that they pay close attention to. So that's sort of a leading indicator into where the market is going and how they will react. I had a bit of a thought this morning walking in.
Congrats.
Every now and then, I was crickets are very well timed. Trump had a sort of Liz Truss moment, right? Mm-hmm. Where the bond vigilantes came in and put him in his place and said, "Now hold on now."
Yeah.
Do you think that they'll sort of have a leash on him and his behavior, and that will be something that he'll always have into consideration now going forward in the rest of his term?
And I think that's what I mean when I say Besant has control.
Yeah.
Right.
Because he understands the value of the bond market.
Oh, absolutely. He is one of the biggest experts, and that's why I feel comfortable that the tail risk has gone.
Yeah.
Right. Now you can still get a slowing in the economy. So, don't get me wrong here. I am still bearish. I think we have a peak in the S&P within 2% of here. Right. I think we've got a few months of some pretty volatile economic figures. This week's we're seeing an incredible amount of data. So I'm actually going to keep things small this week, right? Because Wednesday inflation, Thursday manufacturing, Friday jobs. There's three potential,
Do you think people are sort of overpricing the possibility of an American recession? I saw IMF, they raised their possibility of an American recession to 40%, if I'm not mistaken. But the base case is still continuous growth, not as high of a level, but they still believe in small American growth in the economy.
Yeah.
But are you still a believer in an American recession, us facing an American recession within the...
I think it's inevitable because... Yeah, you're going to have a couple of months where the figures are telling you about this front loading of trade, but then literally there's a chance it drops off a cliff. And when we're seeing shipping data like the FT's reporting this morning, that there's 400,000 less containers are going to be delivered, and we're getting 45% drop-offs in trade between China and then that I can't see how that doesn't result in anything other than recession.
Yeah, I would like to be a bit more optimistic than I am.
Or let's not even talk about recession, right? Because it's a bit meaningless.
Yeah,
let's talk about earnings and does this hit earnings?
Speaking of earnings, one company reporting this week that I will pay close attention to that will sort of work as an indicator in the labor markets and also the American consumer, Walmart.
Yes. What day? Do we know?
Coming back to you.
Yeah. Well, I tell you, you check what's coming up this week, and we're going to go through it in fast markets. Waka waka. The market is about to make fools of everybody and dump soon. Retail have been buying like there's no tomorrow. And the thing is, around about this time of the month is when you get that buying. Because, of course, people get paid and it goes straight into their S&P trackers.
Yep.
Or, the pension funds go in at the start of the month. So, yeah, the next few days you might still see support. But, yeah, I'm wary. I'll tell you one thing that's getting bought this morning, though, and that is the FTSE. Up 37 basis points, and it just continues every day. There's buyers in there. And I don't see that stopping.
You're one of them?
Delivery doesn't really count, does it? It's FTSE 250. But I'm long the FTSE.
There's some pretty good companies in FTSE 250.
On that note, we'll take a quick break. We'll see you back in 1 minute. For fast markets.
Let us know in the comments what you want us to talk about.
Well, yeah, hit the like button.
And the subscribe.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Right, fast markets today. We're going to go through by days of the week that companies are reporting. It's a big week for US reporting season. So Tuesday, we're going to start off with Visa, Coca-Cola, and Starbucks.
Yes.
So I've got a position in Starbucks. I'm happy to talk about that. Do you want to take one of them, Ronnie?
Yeah, I'll be happy to talk about Visa, because Visa is a company, as we all know, that's something that we all use every day with our Apple Pay or whatever. And this is something that's serving as, in my opinion, an indicator in terms of consumer spend and activity. So we can see there's been a slight drop-off in Visa. So I think I'm not going to make...
a huge run, though.
Yeah, a huge run. I'm not going to make any predictions on it, but I am going to look closely on it to see what sort of number of transactions is something that I'll be looking at closely, and value of transactions. And another payment provider that we have on Tuesday is PayPal.
Well, just on Visa, though, that'll be really interesting, their forward guidance.
Yes, that will be something that we'll look closely at. Forward guidance on Visa. And PayPal will be interesting to follow as well, because they announced their partnership with Coinbase and Tencent in terms of crypto payments and their stable holding.
Yeah, I can't. I think I'd be interested in looking at downside for Visa, right? Because
let's stick to Visa.
It peaked at 360 and it's now trading 335, but it's come a long way.
Are we selling some calls here, mate?
I'd be tempted to sell calls, yeah. So I think that would be, I would even sell a call to buy a put spread.
Okay. What's the spread?
Let's have a look at this. So let's look at the May results. The expected move is $15. So it's about a, what's that, 5% move? Yeah. 5% move on numbers. we can sell some 360 calls and maybe buy something like 330 to 315. What does that give us? So yeah, that cost me a couple of bucks. I quite like that. So buying a 330, 315 put spread, selling the 360 calls. So that gets me $2.30 and $15 of downside.
Interesting.
Yeah,
Well, when the market opens, you can place that trade.
Yeah. Right. Sorry, PayPal. I just do not like PayPal as a company.
Yeah. They had a big write-off with the honey scandal, but they are looking up with their partnerships with Tencent and Coinbase to enable their further payments with their Pay USD. That's their stable crypto coin that's pegged against the American dollar. But just before we move on to Wednesday, Coca-Cola. Pepsi has come out and profit warned and revised their guidance.
When was that?
I think on Friday, if I'm not mistaken.
Really?
Because they talked about it on the FT this morning.
Right.
In the podcast. So I think looking at Coca-Cola, a company that did quite well during 2008 as cheap consumer products. So how it acts and what sort of profit, if we see a profit guidance or estimation there, that's something that we'll look closely
There's
at.
chart up Pepsi. We see there absolutely on that big move down from 141 to 135. Sold off again on Friday. I just think I think the Coke CEO is one of the best CEOs in the business. He's really, really impressive. And he always gives a great interview on CNBC after the numbers, and he goes through exactly what they're seeing. I think that Coca-Cola might just be a little bit better placed.
Yeah, you seem to be a big fan of Coca-Cola, mate.
Yeah. Because, I mean, well, what do you drink, Pepsi or Coke?
I'm a DC guy, Diet Coke.
Right.
But I do love a Pepsi Max Cherry. That's my guilty pleasure.
Oh, God.
Okay.
Do you drink vodka Red Bulls as well?
Only when I need to keep up with you, big man. Right. Coca-Cola. Are we doing a pair trade there? Buy cola, sell Pepsi?
Nothing to do. If Pepsi have already warned and we're worried about the consumer, the stock looks like it's at all-time highs there, or close enough. So I think nothing to do there. Right, Wednesday numbers, we've got Microsoft, Meta, Robinhood, and Qualcomm.
Yeah.
Which one?
Big tech day. But I'm actually going to focus on Robinhood.
Okay.
Courtesy of my man, who was it that requested it? Monkey Man, of course. So I think Robinhood is a company that is going to have some really, really strong results. We saw that almost every single large US bank reported increased earnings, more than expectations, due to the volatility that came out in the trading. So a company that has positioned itself brilliantly to profit from the retail trader increased action, as well as increased innovation. I think Robinhood is going to have strong results coming up. What's the expected move?
For the second time today, I agree with you. This is worrying.
I'm going to go out and buy myself a lottery ticket.
Right, the stock trades at 49. The expected move is $7.40. So we've got, that's a big move, isn't it?
It's a naked call. Just go for a naked call, mate.
15% expected move, and I think we're both saying higher.
Yeah.
So how do we take advantage of that then? That's a tricky one.
I'm telling you, just a naked call, man. All in.
Not if it's a 50% expected move. I might have to play it via 1x2, something like that. So $15 plus 50, 65. So the expected move is $65. So maybe buying something like, it's tricky, isn't it? 55, selling 2 of the 70s would still have me paying $1.40. $1.40 for $15 of upside. I don't mind that.
That is a good deal.
And I could even sell. Where's the expected move on the downside? 35. Yeah, you're not getting much for that, are you? $35. Right, so yeah, Robinhood there. Let's know your place for that. But you've also got Microsoft and Meta on Wednesday as well. Thursday, Amazon, Apple, and Eli Lilly.
As well as MasterCard and McDonald's.
McDonald's, the Big Mac. That'll be before
Big
the
Mac,
market on
Rich
Thursday.
McDonald. I think MasterCard and McDonald's are going to be two to look at, as well as Amazon. Amazon is partly, but MasterCard and McDonald's is going to be interesting for consumer sentiment. Eli Lilly are going to be interesting to look at in terms of the weight loss drugs.
Yeah.
But the big ones here are Apple and Amazon in terms of the cloud space.
Which one would you rather be in?
That's a good question,
If
mate.
you had to be long of one of them, which one would you rather?
Amazon.
Yeah,
I would go Amazon. But
I
one
would not want to be holding Apple over this.
No, and one to look out for as well is Airbnb. See how tourism is affecting and the number of bookings is going to come into place with everything that's
Especially
going
in
on.
America.
Especially in
A
America.
lot of people are either scared or just don't want to go to the US.
Exactly. And also American consumers, because it was one thing when we had high inflation and we had high rates, but your holdings in your pension or whatever just kept rallying.
Yeah.
People felt rich. But now they're plummeting. So that's going to be another thing to sort of hold back on in terms of consumer spend.
Like it. Good. Right, Matt Arbor coming up with Angeline in approximately 2 minutes. Then we've got the CFO of IG Group, Clifford Abrahams, joining me at 9, and Nick Feingold joining us 9:20. Ronnie, you're going to be tuned in, aren't you?
Oh, absolutely. Glued to my screen.
We'll see you shortly. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome to Live from the Trade Desk with Matt Safe Harbor and Ange. How are you guys?
Very well, Ange. How are you?
I'm very good indeed.
Sunny morning in London.
Sunny morning.
Weekend.
Groovy music. How was your weekend?
Yeah, it was all good. Very relaxing.
Did you do a lot of gardening? I know you've got a
Less
big
gardening,
garden.
more sitting.
And hopefully glass in hand.
Yeah.
Well, take a look at the markets here. We are open, just showing this to you, trader friends. Let me get my full screen up for you because we are, yes.
Amidst our recent exciting Mondays, it's all a bit passé, isn't it? Slightly well bid in Europe and not much change in the US after what last week was a pretty strong week across markets.
Yeah, and then the 2 weeks before that as well, very, very volatile. Elliot and Jack been on the show recently saying that we're still seeing this positive, this skew rather towards more volatility this week. No prizes given. Got earnings, jobs, the whole tariff and recession watch as well. My goodness, no rest for the wicked.
Well, yeah, but certainly this morning there's no real story driving it, and it's a calmer day. And I'm
actually quite pleased because I could do. I think Rich as well. We could do with a bit of, respite.
A respite. But it's this whole thing. You look at the numbers on the screen, see that Dow above 40,000 again. It's what's happened? What were we getting excited about?
So, do you think that perhaps this is the calm before the storm, like some of our viewers are saying this morning, or is this going to be just,
I don't think it could be the calm before the storm. We've had the storm. Perhaps we're moving it. We're sat in the eye of the hurricane.
The eye of the hurricane before it restarts again.
But yes, before we come out the other side and go back into the turbulence, maybe.
How long might this last? Any insight there? Because that's, what our viewers also want to know. Now, how long is this sort of brief period before the hurricane restarts?
Either the expiry of the 90-day hiatus or a funny comment regarding tariffs before then. Given that the tone has softened even towards China over the past week. Jerome Powell seems safe again.
Yes.
That was the most short-lived spat out there, I think. But you're at the whims of a capricious president whose mind is prone to change. That the advisors perhaps have got him back on side and back on track and
reined him in.
Yeah. That you can't discount. You've built your whole time talking about the performance of the S&P relative to your presidency, and to watch it fall out of bed on things you're saying perhaps isn't the best look. So lay off Jerome and go back to some core messaging. It's a tough one, but we'll be looking at earnings this week, I think, rather than Trump.
Come off the chart because I'm going to put up another chart for you. Let's have a look, because last week when the sun came out and we suddenly had this like a gorgeous pub weather, trader friends, I hope you managed to get some of that. I know that Matt, you were out in the garden doing less gardening, just sitting out there. But we have had a lot of the city folk reviving the Thursday drinks. And so I met up with quite a few of them in the city, strategists, and had chats with some of my friends in Libram as well. And, the whole talk right now is whether or not we are going to see more of this panic, or are we going to see stabilization? Just putting up for you there this put-call ratio. We're seeing this fall to 0.81 on Friday. But then it also has moved back down again. Just taking a look at this here. Do you buy into any of these indicators, when trying to navigate the markets and, how sentiment is placed, shall we put it?
It's difficult. I think with regards to sentiment, this is an interesting point, because the concept that there will be panic again on a Trump comment seems hard to grasp, given that anyone who panicked and anyone who sat back, you look back, the consequences of having panicked have been poor. This is game-changing stuff. Tariffs are bad, which fundamentally, everyone could see that picture, and yet making that decision to sell up was a poor decision. This idea that you can ride out market storms has been once again reinforced, I think. So increasingly it comes down to what is the actual real move that should cause you to panic, and is it an escalation in tariffs again? Probably not, because no one quite believes that they're going to be a long-term thing up. They're just a stick to beat people with. So we move on to that what's the next event that should cause real panic, or to get the whipsaw moves, that we might see a slower move back lower, fine, but to get these sharp moves because of something Trump has said, it sort of doesn't really feel like you should do, because who's going to walk out the market having seen, if I sold out 2 weeks ago, it was a terrible decision.
Yeah, you would have got the losses off the paper into real losses.
Well, this is it. So it's that the psychology of investing. This whole. It's the reason why people often say, "Oh, I'm scared of leverage because the market can beat me up." But then on the same basis, you're kidding yourself by saying, "Oh, if I'm fully paid up, I don't really care. I can sit and wait. That time's a panacea. That things will always go up in the end." But it's that playoff between the two. It's still, you should still not be sitting on poor investments on the expectation that things always go up. Leverage has its place for capitalizing on these moves, and make sure you have the right buffer, or you have the right expectations on the trade when you go in.
And it suits your trading portfolio, and we've got good risk management in place as well. That's a really interesting point, because do you generally find that those that ride the sine wave, generally are the ones that come out with a better trade, or I know we always say don't sit on a bad trade, don't let the losers run, but is it that keep calm in?
Well, the last 2 weeks were very difficult because the size of the moves were so much that
we joked that ATR was chucked out the window.
Yeah, exactly.
Get out the window.
Yeah. That if something's fallen 15%, there's probably something structurally wrong with it. It's wasn't the case. It's being able to sit back and identify, and it was very difficult. I mean, Rich and I were talking on a Monday 2 weeks ago when things looked very, very differently. As to what you do, you're looking at prices on the screen and you're thinking, if someone had told me that I could trade at those prices a month ago, I'd have bitten their hands off, rather than you sat there on the Monday thinking, I need to get out of my existing holdings at these prices because there seems to be no bottom. So it's that very difficult. I think the conversation we had then, the conversation I have now, is that you've got to be able to sit back and make that rational assessment about what is it you actually want to still be holding, and has the market overreacted? Overreactions happen in both directions, on the upside and on the downside. And it's being able to make your own rational decision. What do I think is kind of the right move for this? Like, to be able to say on a calm day that price looks wrong or not, very difficult, not like to happen. After a 10% move, yes, there's a lot of noise there. Something's happened. There's a correction, overcorrection, or an undercorrection like to have happened in one way or the other as people realign following whatever that piece of news is. So it's the sort of being able to assess where opportunities are.
Tricky indeed. And trader friends, lots of you commenting here. Let's have a look at some of them, and do let us know, what you were thinking, when we had that huge move last few weeks. Waka Waka.
Is that really the case that 90 days is the 4th of July? Wow, that'd be interesting, Neil.
Well, it's easy to remember, isn't it? Yeah. I was going to say, Neil, I think you are right. It is sometime in July, but as you heard me say several times, do keep an eye on the next 2 weeks as well, because apparently it's been reported that lots of the heads of the Walmarts, the Costco's, the Targets meeting with Trump told him, mate, you've got another 2 weeks. We can stave off those price increases due to these tariffs another 2 weeks, but then we're going to have to, let it rip, right, through the system. So that maybe there might be some move there. Waka waka, saying people don't understand yet damage is done on a large scale. Dollar index hit confidence, yields ripping. Global fight from US markets, strong. Short bids, I suppose that's what you meant, short rather than stort, on bonds likely from Fed. I do see this, Matt, that, it's not so much JP, it's Trump versus the bond markets, And all this is playing out. Getting a question on gold.
People talking. I'd have thought people not talking Tesla today.
Oh well, we had Tesla Friday, the squeeze.
Yeah, but after the Chinese news over the weekend on self-driving, and Tesla is all about the self-driving. And
let's have a look at Tesla first. We'll come, Andrew McKilby. We'll come to gold in just a second. Okay, here we are, Tesla. Tesla for you, having
Tesla
a look
had
at
an incredible week last week.
Friday.
After some earnings. Again, it's the read your earnings how you like. There was nothing in the earnings, I think, to have led to the move we saw on Tesla last week, but it just kept on going up. And then this weekend we have the news regarding advertising self-driving in China. The Chinese have said you cannot say it's self-driving. There was a nuance in the wording, wasn't there, around how much you can suggest it's driving. The belief that as soon as you tell people cars are doing something for you, they switch off entirely, and you lead to more accidents.
I thought this was slightly crazy though, because didn't Musk sign some sort of deal with China to get all of its data to feed it Tesla's algorithm? I feel like I have. But
this is not about the data. It's about consumer facing. It's what you can tell your customers.
Surely feeds into the self-driving system, right?
Which is fundamentally flawed. It's never going to work. It's the pipe dream. That's why everyone likes trading Tesla, because it's always easy to have an opinion. Is self-driving ever really going to work? Are people ever really going to accept it?
I have to say, I can't knock your theory, because I felt incredibly stressed when I did test out their Tesla, at that point, 5 years ago, as far as it could reach in the UK, the self-driving tech. And you still had to watch the road. You still had to put your hands near to you might as well be driving. You might as well be driving is the whole point.
Well, but again, that if you're on an aeroplane, and let's be honest, there's been autopilots on airplanes. Planes fly themselves very well. If the pilot was coming down the cabin, and like the whole flight crew were there, sitting around, no one's really happy. It's.
Speaking of which, as well. It comes at a time when the National Highway Traffic Safety Administration in the US, I thought this was also quite uncanny. It coincided with the NHTSA easing some safety rules for self-driving vehicles. So I felt like maybe they timed this. But look at shares today. I mean, it has not done a huge amount at the moment, but whoa,
it's not yet 9 o'clock, Ange.
Yeah, 9. How many more minutes? I know you have to get out before 9, but we have 15 less than. It's 8:48 right now.
I believe on the overnight exchanges, it's trading up slightly. So.
It's maybe we're going to see a pop. Let's have.
Well, I don't. Yeah. Whether there's pop, but it's an interesting one that maybe the market was so short going into results that this is an unwinding of those positions, and it's structural rather than fundamental. But given the market's opinion as to whether relationship with Trump was good or bad as far as Musk was concerned, again there are lots of sides. There are lots of sides to the Tesla story.
What I have to say though is, from a technical view, if we do close above that trend line, can you see that? If we close above that yellow trend line, then I would be interested, especially on high volume. Can you see the volumes?
Yeah.
Gone up there.
What does that trend line mean? Anything? Come on.
I know it's on its way down, but it's a kind of like a rhythmico in music. It's watch the space. Something interesting is happening. That's what I'm saying. It's a good indicator, a good guide, but the trend, in my humble opinion, overall for Tesla, still very much on the downside there.
Okay, let's talk gold.
Gold. Let's talk about
You
gold.
love talking gold.
I love talking about gold. I get ribbed a lot about my icon on Insta, which is a creature that really loves gold and Harry Potter. That keeps, going for everything: gold teeth, gold coins, gold necklaces, gold earrings. Could go on. Spot gold coming off there. Andrew McKelvey wanted to get your views on this. We have 5 minutes.
Well, it's a difficult one. It's a difficult one, gold, given the slight disconnect we saw over the past 2 weeks, where gold continued to go up. Even when indices were rising. So this just sort of a rush into gold across the board. Obviously, came back off those super highs at the 3,500 towards the end of last week. There is obviously still strong demand for gold. People, rightly or wrongly, still see gold as the ultimate safe haven, the ultimate store of value. I found it quite interesting that we had in the middle of things the disconnect between crypto, which was of course the new gold, and gold. So the Bitcoin price got caught between the two stools of do I follow the tech stocks or do I follow gold? Am I a store of value or am I a store of tech? And we saw crypto belatedly play a bit of catch up with gold towards the tail end of last week, in terms of gone off track there. But the stores, the two stores of value, or the perceived stores of value, your sort of your new gold and the old gold,
Yes.
Play out, sort of moving slightly differently.
I definitely am a fan of the old gold, and I think that all it is here is time frame. And so, Andrew McKelvey, if you're asking about my view on spot gold, I think the long-term view, because of this perceived store of value and also safe haven in times of uncertainty, I still think we have room to go here for spot gold. If I look at, the chart, no matter which duration, I mean, it's insane. Look at it. Look at it. If you just go out, it's just, just a strong upward trend. That's the monthly chart, by the way, people. But looking at
if you show a graph of equities, it will look quite similar, Ange.
Yes,
so,
yes. But gold, if you look at, Elliot and I were trying to crunch through numbers that looked back versus silver as well. Elliot's view is that silver might be the better way to go if you're looking for, more.
Well, if you've done the gold versus silver play over the past 2 years, you've had a terrible time.
Well, he's saying it's now. He thinks now it's changed.
Silver's been touted for a long time as the better gold.
Just like FTSE.
Yeah, it's very similar. Yeah. It's very similar. But I think for a long time that sort of psychological thing of the crossover of the gold and the silver price, it was inconceivable 2-3 years ago that the price of gold would be higher in the actual number than the price of silver, and we crossed over.
I think you talked yourself into a three-way panel with Elliot, yourself, and myself. But spot gold, looking at this short term, long term, I'm very bullish. Short term, though, Andrew McKelvey, as long as we see that the whole China, US tensions ease, and we don't see an increase in hostilities, trade tensions between the two, then we're going to see a short-term.
Yeah, I think we're going to see it drift back. Like, the run was so strong coming up that it's I think it's often you see that period of consolidation.
Yeah, and don't forget as well that we have this key week. We've got jobs, the job openings on Tuesday first, but the big number, of course, Friday. We've got the PCE, got non-farms, I said earlier on Friday, but the earnings as well throughout this week going to give us some noise. But all this comes in a time when pretty much quiet on the China-US front. So I think because all the attention is going to be on earnings, we're going to see a bit of an easing off on the gold price. If trader friends, you are looking to trade gold this week. And we've run out of time. We have to get Safe Harbor to a very important meeting. But don't go away, because we have our CFO Clifford up next with Rich, so stay with us.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favorite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Right, we're going to very quickly open the all sessions before Clifford comes in to join me. So we got us up and running on this Monday morning, the 28th of April. Not too much move, is there? We see Tesla there consolidating around the 285 level. Meta ahead of reporting numbers this week. Also small up. Do we have any losers? Eli Lilly down 1.2%. Up at 870 though. That's put on $100, over $100 in the last week there with the positive news on the drug. Nvidia down 1% at 109. AMD down 1% at 96. Broadcom the same. So some stocks that are reporting this week just touching back a little bit, but not really much change there at all. Yeah, Tesla. So we're going to be doing a deep dive into Tesla and some other stocks around the theory, the idea of embedded AI, right? So getting artificial intelligence, but instead of a car having to talk to the cloud, right, to make decisions, then this is the idea of a computer on wheels, and that the car can actually think for itself. It can make decisions. And big research piece last week on embedded AI, the benefits to it, and also how you see it not only in cars, but in robots, maybe even the defense sector. We're going to be talking about that at 9:20 a.m. But first of all, it will be a discussion top down, a macro level discussion with our CFO, which is coming up after this short break.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
If you're looking
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There you go. Hello, welcome back, and I am very happy to say we've got Clifford in the house. How are you doing, Clifford?
Very good, very good. Nice to see you.
Nice to see you as well. We were just chatting on the way round about the good old days.
Yep.
Clifford's gym bag is from a conference back in '98.
That's right. That's right. As I said, older than both my kids.
Yeah.
Yeah.
Cool.
Who were adults and away from home.
And then right at the start of the dot-com bubble as well.
Yeah, that's right. That's right. That was 2000. So yeah, history doesn't repeat itself, but it rhymes, of course.
And it certainly is doing that at the moment, because we're seeing disruption to global trade that has, obviously sent shockwaves, or the initial shockwave through markets.
Yeah.
But where do you think we are now, and what are you seeing?
Well, I think there's a bit of a standoff, isn't it? So markets have warmed up a bit on the expectation of some sort of accommodation, which is probably right, but always inevitable. Yeah. And so we've all got very varied sources of news now. So I was reading the BBC on the way in from their reporter embedded in Washington, and that seemed to be like the Washington consensus, which is that perhaps Trump sort of over-egged things a few weeks ago, and now they're reining back. And I think that's what the markets are like to believe right now.
Well, that's it, and it's whether we're in this situation of hope.
Yeah.
Of we actually think, well, surely they can't, or is there a power struggle within the White House? And Bessent is obviously market friendly, whereas Navarro and Lutnick seem to just be.
Well, maybe in this sort of good cop, bad cop. So I think that's clearly, and it may be genuine, of course. So Navarro actually, went to prison, on, at least from his point of view, on principle. Yeah. And while Bessent is an old, worked for a hedge fund, didn't he? So I think you've got different backgrounds, and I'm sure I'm not a mind reader, but there's always a debate. But ultimately, you can see that Trump is driving things, and as we all know, he's looking for that deal.
The art of the deal.
Yeah, exactly.
Do we think that, I guess, since 2008, there's been this incredible brand built up? USA is a brand. Mm. Is he starting to damage that? Is that what we're seeing in the Treasury market and the dollar?
Well, I think a little bit of that, and we noticed that sort of reverse correlation, didn't it? When markets were getting riskier, actually the dollar weakened, which is a new thing. I think what's clear is there's no alternative, right, to the dollar. So perhaps the euro, I think, for a short period of time was seen as a source of stability. But I think with war on the fringes of Europe and demographic and economic challenges in the eurozone, I think that's unlikely to be the substitute reserve currency.
Yeah, scary thought. If it was, thinking back to 2011.
Exactly. The pigs and all of that.
Yeah. So I guess it's a struggle now to know have we seen the level of brinksmanship or this standoff between China and the US? Do you have any sort of feeling which one of them might blink or where it might go?
I don't think it will be quite so binary, actually. Okay. I mean, again, no one's got a real crystal ball, but you saw, I think, the announcement from Apple saying that they were going to move production for the US market to India.
Yeah.
So I think that was quite interesting as a way of sort of softening up, if you like. But I think that China might be at the end of a series of agreements. And if you were the US, negotiating, you might want to close out some of the smaller countries first, possibly even the UK.
The easy wins.
Yeah, exactly. Where there's a lot of incentives to do that without actually giving up much from the US perspective and putting pressure on the bigger economies. So that's what I would see that as the first sign rather than China.
You've operated at the real business end of companies for more years than we'll mention. How do you make the big business decisions when there's so much uncertainty?
I think it's really tough for CFOs, for boards, but it's very company specific. So IG, is an example where we're not exporting manufactured products into the US. Yeah. So actually, volatility in markets is arguably good for our business. So I think it's very business specific, and you can see some of the exporters really struggling with their earnings guidance because things are so unpredictable. So I think rather than general sell-offs, which is what we've seen in the early days, I would expect markets to be picking things over and looking for those that are relatively sheltered from what's going on versus those that are sharply exposed. And we saw that in COVID and Ukraine.
I heard one of the big fund managers saying, right, all we've done is we've put our holdings into 3 baskets.
Right.
Those that are affected by trade, those that are affected by a potential recession, and then those that are immune.
Right.
And we've taken a little bit down here and we've put the money into these ones.
Yeah.
Just to be safe, I guess.
So that can be, there's an argument. I mean, that sounds like more of a trader's, argument. And whenever you hear those, you think, well, did you do that before or after the market reacted?
Yeah, well, I was very much after that.
So, for traders like many of our customers, they can take a view day to day. For long-term investors, it's really hard to pick winners and losers. And I think ultimately there will be a short-term solution to the trade, and then what happens in the long term, it's very difficult to tell.
Yeah, because it takes years to get those supply chains perfected, and when it comes to sort of deciding on guidance, run us through a more general idea of how a CFO, and because it's going to be a big move for those over in America at the moment. When you're going into earnings season, how do you decide what the guidance should be?
Well, I think what's really important is to be clear on your assumptions. And when I used to be a CFO of a bank, interest rates are super important. And many CFOs got tied up in knots because they weren't clear on their interest rate assumptions. Was it the period end? Was it a week before when they were getting their script together? Was it today? Yeah. So I think being really, really clear on what your assumptions are, then you can't be faulted. And I think the challenge, obviously, is the market tends to forget those assumptions. But that's what gives rise to confusion on the day. And I think we're seeing that with some of the, tariff-affected companies. They talk about, well, here's our guidance based on this sort of view of the world. Clearly the view of the world could be different. And I think that's all you can do. I think internally, or from terms of business management, all good management should work with scenarios. They don't have one view of the world. So you need to say, well, this is what we think is likely to happen, but we're safeguarding our downside. And Apple's a really good example. Do we really think they can move production within 18 months? I don't think so. No. So they've obviously been planning for that for some time, and they've triggered their contingency plans. So I think all good businesses internally need to deal with scenarios, but externally give a clear indication of your assumptions and perhaps aim off a bit, be a bit prudent.
Right. So part of being a management team is actually already having predicted things well ahead of time and having a plan.
Well, I think the prediction markets actually anticipated Trump, didn't they? Well before November the 5th.
Yeah.
Maybe none of us really believed that, but it was clearly a possibility. And Trump has been going on about tariffs for some time. Now, it's really quite difficult to anticipate, one move after the other. But I don't think it came really out of the blue, notwithstanding markets' reaction. So I would expect, many management teams, certainly on the manufacturing side, to be diversifying their supplier base. And that's what you're seeing, I think, and big manufacturers triggering their contingency plans.
Yeah. It's the difficulty is when when we see money come out of the US, you know, if the brand has been damaged, then Larry Fink came out and said he likes the look of the UK.
Yeah.
And there's many undervalued companies in the UK. Do you think that we start to see some money come into UK at last?
Well, we've seen that, and we've seen some of that, which is, you know, perhaps it's a catalyst for, you know, growth off and income on. So the UK is, you know, lower growth perhaps, but higher income. And so the tariffs was a catalyst for that rotation. I do think, I mean, I sort of never bet against the US, right? So I think it's interesting the markets are very focused on tariffs, but I think for me what's reassuring is at least the administration or even consensus in the US is taking the deficit seriously. So the US deficit, you know, is you know, extraordinary, and the bond markets have been less of a check on that than they've been in the UK and Europe. And so I think whether it's tariffs, but you know, Doge or generally, you know, there's a greater focus on fiscal discipline in the US, which I think is long term a good thing.
Yeah, and they haven't been given the sort of reward for that in any way. It almost feels like they're doing the right thing just in the wrong way.
Yeah, I mean, it's the art of the deal, isn't it? I mean, I think we can't second guess it. I mean, you know, it's a difficult job. I think all politicians have difficult jobs. So we're a little bit, you know, we're in the spectator stands rather than on the pitch on this one.
Yeah. One other potential place to put the money is into gold.
Yeah.
We've, you know, seen a lot of clients to move their positions into gold. It seems that governments have been doing the same for years. What's your feeling? All-time highs at just below.
I know it's sort of incredible, and it's the asset class of last resort in many ways. So perhaps understandable, and you know, gold is decent to have as part of your portfolio. I mean, will it be lower in 1, 2, 3 years' time? You know, one would hope so, because that means the world will have returned to a calmer place.
Yeah, true. And the budget deficits have been got under control.
Potentially.
Excellent. Clifford, is there any particularly enlightening questions that you're getting?
Well, I do think, questions that, I mean, all I can say, I mean, the month of April has been something of a holiday period. I think it's when, I think Easter fell quite late, and so we've got holidays throughout April and holidays coming up. I do think the world's a better place when the weather's nice. Like you can see, I'm in a t-shirt. I walked across the city, you know, feeling quite positive about things. So you know, we always look at the latest you know, crisis as one-off, but we've seen a whole series of these over the years, and we talked about one, you know, 25 years ago with the dot-com. So personally, I think it's refreshing, because if the markets are constantly positive, you get this build-up of bubbles that ultimately get popped. So I'm not a downcast. I think there's opportunities for IG, there's opportunities for our clients, and you know, I'm very much looking forward to the period, you know, between now and the summer.
That's really interesting, because my Saturday morning, after the gym, of course, was spent reading Howard Marks' shareholder letter. Okay. And it was much the same message, you know, in different words, but we've seen this before. Nobody knows, the title of it was Nobody Knows Again.
Yeah.
Because he had done this after the dot-com boom, he'd done it after 2008 and COVID. But his message was the same, you know?
Well, I think, you know, mean reversion is often derided, you know, but perhaps it's all part of how we think about life. We have a view of what's normal, and when things depart from normal, we expect it to go back. But I think if you do believe that, then, you know, crisis is a time to pick up assets that perhaps you've been looking at and monitoring, but were just too expensive. And I would encourage that sort of approach rather than to scramble around and exiting, you know, high risk and going into high income and trying to get ahead of the latest gyrations of the market.
Nice. Excellent. Clifford, thank you as always for joining us.
Very good.
Sorry
good
it's been so long as well. You're invited back, what are we on? In May.
Very good.
Excellent. Thanks very much. Next, we've got Nick Feingold coming up, and we're going to be discussing the big bit of research that came out last week that saw a squeeze in Tesla, and you heard it here first on Friday morning. We'll see you in 2 minutes.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. Right, here he is, the man who made my weekend a lot better than it would have otherwise been, Mr. Nick Feingold, back in the house.
Hi, Rich. How you doing?
How are we doing?
Good. Is that the camera?
So this is your camera there.
Okay.
You got a message for the people?
Hi.
Right, let's replay what on earth happened on Friday morning, because this poor man phoned me to have a chat about a bit of research. And I answered it live on air, and here's the result of it. We'll play it now.
Boring stuff.
Nick Feingold phoning. Shall we answer? Nick, we're just on air at the moment. Do you have a message for the viewers? Then I realised I had to put you on speaker. You're on loudspeaker. So say good morning to everyone.
Morning, everyone. I think that I saw the best piece of research I've seen in 40 years on Tesla last night.
Right.
And
I'll tell you what. Send me it over, and I'll put it out to the viewers there.
yeah, but I think you could see the biggest short squeeze in Tesla and Nasdaq in history.
Right. Brilliant.
Breaking
news.
Fantastic. Nick Feingold, thank you very much.
Right.
Good man.
So,
What a Nick.
So we decided to bring him in to discuss this more because I must admit, I made some good money on that on Friday. So thank you very much.
Well, I don't know if it's the biggest squeeze in history. That's sure. That's
in a day, not too bad.
9.8.
9.8% it finished.
Yeah.
Sorry, 8% from where I bought it. Yeah.
Yeah. Because you're slow.
Yeah. Exactly. If I'd not been on air, I could have made more of it.
Yeah.
So where did that come from?
So look, credit where credit's due. It's an incredible video that was put out by my great friend Adam Jonas at Morgan Stanley. I think it's available publicly because I don't think that there are share recommendations attached to it. Mm-hmm. And you had to sort of piece it together a bit yourself. And
it's about 20 minutes long, isn't it?
It's a brilliant video. Look. If you speak to people that run alpha capture systems and if you pulled your own data, more people will lose money on Tesla than any other stock.
100%.
Including myself, by the way.
Yeah,
in terms of it's an impossible stock to get right, but it's what Adam did is there are two stories. There are two Teslas. There's a short-term duration story, which is the car company, and there's a long-term duration story, which Adam describes quite brilliantly as he basically says that cars are to Tesla what books were to Amazon, right? Exactly. And so you've got the short-term duration story, which is this is the most expensive car company on earth, that there are 77 million Republicans, and then you've got all the Democrats who are probably the Tesla buyers, as a generalization. That's a generalization, but probably more Democrat owners of Tesla. And then you've got the rest of the world who's not particularly enamored with Musk and his politics. And so people look at Tesla and they basically go, this is a ridiculously valued company. And it's a car company. And it's a car company with a brand problem.
Yeah. And let's just run. So Adam Jonas covered me in 2008, 2009. So I had some of his early work in his career, and he was brilliant then. So 15 years later, this guy is the top autos analyst in the world.
No, I think he's the best analyst in the world.
Yeah.
But bar none. And there's a really good reason for saying that. There are lots of brilliant analysts, right? But what Adam understands, which I can't see very many examples of anywhere in the industry, is he understands content.
Yes.
And he understands how to tell the story. Yeah. And he understands how to put it in a way where we can all understand it. So he doesn't look to cast intellectual superiority over the audience. He aims to make his content engaging and understandable, and he was the first person to cover SpaceX, and SpaceX is now, I think, the biggest private company on Earth. He was covering outer space when people thought he was mental, and now he's talking about drones, and people think he's mental, and he's not. He's the least.
And so just to give an intro to this, right? The note is about embedded AI and the rise of embedded AI in the auto sector. Simply put, embedded AI means building intelligence directly into the car itself. It allows it to make decisions in real time rather than going to the cloud servers. It's like giving the car its own brain instead of constantly needing to phone home or asking your mother for answers. This shift's crucial as vehicles evolve into mobile computing platforms with wheels.
Yeah, or flying mobile platform. I think if you spoke to Adam, I think if you look far down the line, I think he would probably say that he thinks that there'll be more cars up in the air, than driven by AI air traffic control, and AI makes air traffic control at scale much more plausible. I think he's more bullish on drones than cars.
This takes us nicely into the slide that we have. And this is not Nick Feingold's dreams. This is the dreams of Tesla. Guys, if we can pop that up on the screen, please. So run us through what we have here.
Well, as I said, there's a short-term duration story and there's a long-term duration story. And so, like, if you just take one of those segments, which we borrowed from the video, space. I mean, Musk, although it's not, SpaceX is not a part of Tesla in terms of the satellites. He already has the power to change the war in Ukraine by turning off the internet and turning on the internet. So the first things first is you own space, you own a lot of the communication that's taking place on the terrestrial planet Earth, right? He kind of owns space.
Yeah, and the internet, the new internet that he's putting around the globe.
Right, and there are a lot of interesting stock calls around incumbent broadband players and the impact that has. It's a very price competitive business, but whether it be British Telecom, Deutsche Telekom, any of the big US incumbents that are in broadband, be interesting to see how that plays out alone. But it's really space plus manufacturing capability. So he was talking on his call about producing a Tesla every 5 seconds. And I also think that he thinks of cars very differently to most people, which is he thinks of them a bit like phones, which is you only have an Apple or a Samsung. You only have an iOS or, there are 2 operating systems. Phones have become pretty generic, I think the long dated vision that he has is, car's a car, you'll be sat in the back of it, texting while it drives you somewhere. It'll deliver itself. If you order one from the showroom, it'll drive itself to you. You will own it, and you will own the income off it when you're not driving it as it becomes an autonomous taxi. That's kind of...
And he actually makes a point, buy a Ferrari, buy an Aston Martin at the moment, because those things will appreciate in value so much. What have you got yourself, Nick?
Me?
You must have a nice car there somewhere.
But funnily enough, I just bought a Hyundai.
Oh, I'm so disappointed.
Yeah. No, I've gone through my i8, R8 sort of wingy doors things.
Right.
And I've sort of kind of grown up.
Yeah.
And I've gone through my 125 grand Range Rover phase.
Oh, beautiful.
And this Hyundai is like a Range Rover, but in every way, shape or form, but 46 grand, not 125 grand. And I love it, actually.
But his
I do have a BMW
was,
sort of convertible, but I'm not a car guy, really.
And nobody is going to be, right? Because nobody's going to be driving their own car in this future that Adam talks about. It is just purely, it's an automated.
Well, people are always going to drive. I mean, there's still vinyl records. We were sold, sold CDs, but he sees them as sort of, as luxury, fun items. They're not a utility not in Adam's vision, but in Musk's vision.
Yeah.
This is a bit of a waste of time. Why would you bother? It's not that much fun. You can take in the view if you're not driving. You can text if you're not driving. You can be much more productive if you're not driving.
Yeah.
But really, the infrastructure of the roads is pretty clogged. The infrastructure of taking on the challenge of what's above the road is more interesting.
And another part of the video that really struck home to me was the importance of manufacturing. And it's the manufacturing of the cars, it's the manufacturing of the robots. But all that enables is the opportunity to get more data. So you go from the car to get data, which sends it back which improves the manufacturing process, which sends it to the robot, which then gets data and sends it back. The whole thing is just building up this incredible amount of data.
I don't know, how much. I mean, obviously, reinforcing loops with AI is one thing, but listen, I mean, it's pretty simple, which is the data plus the robots, plus the batteries and the energy storage, plus the AI, plus the manufacturing, plus the satellites, is the long-term duration story.
Yeah.
Right? It's a story that really makes Tesla start to look like a defense company. Right? If you believe, because again, Adam's question was, you had to stay up till 12:30 at night to hear it. But he said, "What about drones, Elon?"
Mm-hmm.
And Elon Musk turned around and said, well, America can't produce its own drones. Actually, I saw that Eric Schmidt has started a drone startup as well. Right. You look at how the war in Ukraine is being fought, it's drones. If you look at the use of the of drone capability in the Middle East and Gaza for surveillance and all sorts of different, you know, there are some really horrible scenarios with drones. Certainly drone swarms.
Yeah.
If you've seen those things that are replacing firework displays, that there are 1,000 drones. It's a beautiful thing of beauty
in that,
but not if you attach a little stick of dynamite to it. Yeah. So I think it's possible that Tesla becomes a company that is of profound national security interest because of its manufacturing capability.
And he's in the right place at the moment for that to happen.
Well, it's how wars are being fought, right? And so whether Tesla starts to produce drones, I mean, I'm pretty sure it'll start to produce flying taxis at some stage. So that makes Joby Aviation quite an interesting company to take a look at as well.
That's JOBY, isn't it?
JOBY, and they're also backed by Toyota.
Right.
So like all these trends are in place, and of course it's a very difficult stock to trade because you've got the short-term duration story. But what I would say is this: I would say that sometimes, these are rare cases, a company is afforded a market cap of staggering proportion, and then uses that market cap to grow into the business that it should be. Yes. And sometimes it's the business it should be and then gets the market cap.
Yeah.
So if you look at that Amazon example, Amazon for 20 years didn't make money. For almost 2 decades, it had a market cap that was ridiculous compared to its profitability. Yeah. But people saw and understood the long-term strategic vision that Bezos had. And if you'd bought Amazon, pretty much put up a 10-year chart on Amazon.
That's exactly what I'm doing, yeah.
But maybe 10, 20-year chart on Amazon.
Okay, let's go to the monthly and just see what we're talking about here. How long did it take? Chart up, please, guys. How long did it take from, look at it down here. I mean, we're talking $1 back in 2006, 2007.
I was actually working in New York and we floated it. And it traded down 30% on the first day, I think it was, because the internet stuck. So you went to go and order something, and it would freeze, and everyone's like, "This is a part of whatever."
Well, it's funny. I was there for Google on the New York Stock Exchange the day that Google came, and how many shares of Amazon did you buy back then?
I didn't buy. I was 20 something. I didn't really need to work. I just needed to buy a few shares of Amazon, a few shares of Apple, and then do nothing. But none of us did that because we spent it all on alcohol, basically.
Invest in memories.
Yeah. So I think the key message in trading Tesla is, the same as Amazon, which is the long-term duration story. I think will win out. Right. I mean, I don't know what the numbers are, but Tesla was still free cash flow positive on the bad numbers, which is kind of pretty remarkable. I mean, I think that the future for the car company is not great. And I think people fight that constant battle of the long-term duration story versus the short-term duration story. So I think what you need to do is you need to be kind of long Tesla in tiny size and be prepared to buy it on all of these pullbacks. Because the one thing you do see with Tesla, and you have seen it over a decade now, is short squeezes. The long-term duration story will squeeze the short-term duration story regularly. I think that there are price targets out there of 400 or 500. But again, these are Musk's words, not mine. He said, if we execute, we will be bigger than the 5 largest companies in the world put together. And a lot of my members of my investment club saying, like, you don't buy dreams, you buy fundamentals. And I'm like, actually, he dreamt about populating the world with electric cars. He dreamt about having charging points all over the world. He dreamt about landing a space rocket. I'm all right being long his dreams. Well, what I think of him personally and Doge and all of that stuff part of.
You've got to put that to the side anyway, don't you? I mean, that's not. It's an investment decision.
The short-term duration story says you can't put that to the side because people aren't going to buy his cars and they've been smashing them up.
True.
And that's why everybody's at war with themselves with Tesla, which is why it's such an interesting company.
Well, even there in the two most recent research reports we see, we got a price target of down 30% and one of up 43%. So it's really hard to get this one right. But
or it's really easy, which is you just buy it, hold it, and shut your eyes and take a 5-year view, which is I suggest, if people are going to buy it, that's what they do.
Yeah.
Because that's what was right to do with Meta, that's what was right to do with Alphabet, that's what was right to do with Amazon.
And of course, this isn't just a Tesla story, is it? Chart off, thanks, guys. This also looks at Meta, it looks at Apple. Embedded AI isn't just a Tesla story. And it looks interesting. Google with Waymo as well. You've got, in fact, they finish with a large screen of 100 stocks that are involved in this.
Right, from Hexagon in Sweden to all over the place. There's that slide represents a constellation of companies that are associated with each box. And when I spoke to Adam, he said a really interesting thing. He said like Musk said he'll be as big as the 5 largest companies in the world put together. And he goes, yeah, but at that point the 5 largest companies could be $5 trillion each.
Okay.
Right? Because the world would have moved on. So it's not like that it's the only opportunity on Earth. But it's like with Meta, whose numbers I know that are this week. Google, all of these companies. These companies could, Amazon, they could be the first companies to have virtually no employees as well. So when you look at their bloated sort of cost base, right? I think they could be national defense companies. They could be. I mean, Tesla's not included in any defense ETF.
No, not yet.
But I'll be interested to come back in a year or two's time and see whether it is or not.
Even the robots, they did a projection of, they think you can lease one robot for $5 and that replaces 2 humans that are paid $25 each. Right, so a huge uplift and a huge cost savings for companies. So Adam puts in a number and he says, right, let's say robots can replace 1% of the working population in the US, just 1%. That is worth $100 a share of the Tesla market cap.
Well, 80% of Tesla's market cap, I think, in his calculations, are related to businesses of the future, not the car company. Yeah. So I don't know exactly what the percentage is. But again, you tend to think of robots as domestic servants that serve you coffee. I tend to think of it as a robot army and a drone army.
Whoa,
it's Terminator.
Yeah, it's real. It's
Terminator.
The Matrix.
It is. It's just. If you look at that slide, you add those 6 things together. You've got flying drones, you've got a robot, you've got robots, Yeah. I mean, I'm sure they'll become domesticated at some stage, but the prime, and then you get this Luddite movement, which I wrote about for our club members, this Luddite movement where people start smashing the robots because the robots are starting to take their jobs, and then the robots are told to fight back. And that's kind of where it starts, right?
That is, and
that's where it all starts.
And
we used to smash up looms, right? Because they took jobs in factories.
Right.
What's happening to Tesla and what's going to happen to the robots may not be that different as 1,000 Uber, 10,000, 100,000 Uber drivers are made redundant by autonomous cars. What do we think is going to happen?
Yeah, where are they going
to? It's history repeating itself.
Yeah.
And you've started to see that with Tesla right now, which again is, for people that want to view it as a car company and have its short-term troubles, is kind of, it's a reason to sell the shares.
And Amazon's already gone from 1 robot for every 5 members of staff is now 1 robot for every 2 members of staff. So it is happening. And it's worth getting on top of. I think this research report in particular is one of those ones that you know that it's a must read and it's a must watch.
It's a video.
We're moving to content. Isn't that interesting?
It's a video that anyone can understand.
Yeah, I think.
And there's one slide where you can just say that plus that plus that plus that is greater than the sum of any of the individual parts by a factor of 10.
Yeah.
So it's a tough one, but I think you probably sort of have to own it in
some sense,
small way, as long as you're prepared to own it long term and ride out the volatility.
That's it.
And also, say they lose 10 billion in a year. Well, the market cap today is 800 billion. So you could raise 10 or 20 billion with 1-2%, a tiny amount of dilution can ride out the losses for the car company until you arrive at what he sees as the promised land. And there'll be violent objections to his vision.
Now, Nick, just touch on, because this does prove your point. The way we met was by you talking about content being the future of equity research to me. This proves the way that we're going, right? One of the big futuristic pieces by Morgan Stanley being a video. Where do you see that becoming more common?
Well, I mean, as you know, we're beta testing a product called ShareFlix, which is Netflix for stocks and shares.
Nice.
And what the new regime of AI has done has basically, I gave somebody a script last night and I had a video back in 5 minutes, right? Untouched by a human. It's not of high enough quality to release, right? But the pace at which it's moving would suggest that the first stage of the ChatGPT revolution is text. Second stage is text to moving image, which is going to change everything.
Yeah.
It's going to, as I think we discussed it briefly last time, but it's going to change when companies can do $1 million Super Bowl advert for £1,000, which is, we're not very far away from that. You've seen some of the stuff that we've done already. And when you can give an engine a single prompt and it can produce a video of outstanding quality, it changes financial storytelling. It changes every company on earth. It changes advertising. It changes everything. As I said to you last time, I think BMW will spend 100 million telling you why to buy the car, but try and find a decent piece of content as to why to buy the shares.
Yeah.
How many more C-suite CEOs do we need to listen to talking to an hour on a Zoom call? The use of monotone as a selling technique is
We've got Axel Rudolph coming in now to do a trade of the week. But would you come back to us and explain more about ShareFlix and maybe give us a demonstration of what you see at some point?
We can definitely show you some fun videos, but the ones that we've done in the past are not AI generated. It's the AI generation getting to the point where it looks authentic, which is difficult. But yes, it would be my pleasure.
Excellent.
All right, buddy.
Will you give our channel a little plug? Tell your fans and family out there to like and subscribe the YouTube.
Is that what you have to do? Like and subscribe to YouTube?
That's it now.
Although Rich is trying to make financial services content not boring, so that seems like a cause worth following. So please like him, both of you that are watching this. All right.
Magic. Thank you so much for coming in.
Cheers.
Yet again.
Ciao, ciao.
We'll see you after the break. Axel Rudolph, Trade of the Week.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There are too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hello and welcome to this week's Trade of the Week on Monday, the 28th of April 2025. I'm sorry that it's slightly later than usual, but I'm sure you found the previous content very interesting as well. And let's get straight into this Trade of the Week. And I would like to go short the DAX 40 index. And I know last week we went long, but let's talk about why we want to go short today. Basically, what you can see here is we've had a huge up move last week during the 4 days that we were open here in the UK because we had a Easter Monday off. And you can see here that we're starting to lose upside momentum. So the candles become shorter. But more interestingly, what we're also seeing is that we're hitting this previous support line, which is now this dashed line acting as resistance. And it capped the upside on Friday and seems to be doing so again today. So that plus the fact that we're testing previous lows here, all this cluster of previous lows, leads me to believe that this is pretty important resistance and we may well top out here. So for that reason, I'd like to go short now. And the stop loss for this trade would be probably not just above the early April high here, because that might be slightly too close for this trade, but above the previous late March high here, around 23,230 or so. And the reason for that is also, if you look at the ATR at the bottom of my chart, average true range over the last 10 days, that is around 500 points. So that means over the last 10 days, on average, the DAX, including any gaps, moved up and down by 500 points. And if you take a stop loss and place it 2 ATR away, twice the average true range, then that gives us a 1,000-point stop loss, which is approximately where we would be if we were to place it just above the late March high. So today's trade of the week is to go short the DAX 40 index with a stop loss above the late March high and a downside target probably around the 20,000 mark. Welcome back to Technically Speaking, and I'll just go through the trade of the week from this week and also the previous week. So this week I wanted to go short, as I just explained, for these technical reasons, and also because we could have what is, in my opinion, perhaps an ABC correction. So wave A up, wave B down, wave C up, and this distance here is similar to this distance there. So it could be a corrective move in terms of Elliott wave, and that could mean that we could now head back down again over the coming weeks and months. So that is a possibility. Now, what we also need to look at, obviously, is whether we can break through this uptrend line or this support line Let me just draw it on here, and you can see that right now we're a long way away from here, but I wouldn't be surprised if we were to get back towards this in the coming days. And last week, as we saw on Trade of the Week, we went long here on Tuesday around 21,150, had an upside target around 21,500. Now, that was just an upside target. We had gotten out there? No, we would not, because on the next day we had a higher high, and then the day after that another higher high, and then another higher high. So I would probably only get out of that Trade of the Week from last week, which was long, today going short. So reversing our position to the downside. And also with regards to Trade of the Week, I did mention last week that 3 weeks ago we went long the Palladium futures contract, the June contract. That was on this day here. It went very close to our upside target here at 1,000, and then it came down again. So if you're still long that one, maybe now is time to get out as we test this resistance. Obviously, you could have gotten out at much higher levels, but just for clarity, I wanted to mention this today. Now let's look at some questions. Let's look at Spotify. Let's just do that and see what the chart says. So let me just put my glasses on, because that will make my life much easier. Spotify, here we go. Can we see a trend? Well, yes, we can, can't we? Basically, what we're seeing here, since the highs seen back in February, we've been sideways trading, range trading. And as the S&P and other indices declined very sharply, you can see the Spotify share price actually just retested its previous lows and bounced off those. So basically, this is really, really bullish, because short term, we've bounced off this important low which held, the March low, and we've been grinding higher, and currently we're in the process of testing this resistance area. Now, what I would like to see is for the late March high here, and also, because this one is slightly higher than the previous high, the early March high to be taken out on the upside. So if you break above this high here on the spread bet, it's at 62,644. If we rise above there, that would confirm a break through this resistance area, and we could then head up towards the February high again, and probably higher as well. So Spotify, for me, technically speaking, by just looking very briefly at it, looks as if we are likely to make a new all-time high. And you can see here that we're clearly heading higher. Again, we had this bearish candle, but we held at previous support. Now we've got a bullish candle on the monthly chart. We'll have to see where we close on Wednesday, the end of this month, because if we close where we are now, this would be a bullish engulfing pattern as well. We saw that previously also here. So this is still a very bullish chart, one that you may well stay long off if you are long. If you're short, you know where your stop is. Your stop is probably just the all-time high here, the February high. If you want a tighter one, then it would be, as I said, the early March high here. Where's your stop loss? If you are long from a long-term perspective, well, basically it's just the low here from the 7th of April. If we fall through there, then maybe something else is going on. But right now, this is still a very bullish chart. So any thoughts on the S&P 500 levels? Well, basically, let's look at the S&P 500. We can see a similar pattern, but not as bullish as we saw on the DAX 40 index, as the rotation out of US stocks into European stocks continues to happen. But you can see the same pattern potentially forming here. You can see this A wave, wave B down, and now wave C up. And we've been struggling at this resistance area. Now, again, I mentioned this weeks ago. It's not surprising. What's the resistance? It's the low going back to the middle of March of this year. This year has capped us on the Trump day, where he said that, oh yeah, we'll put tariffs on pause for 90 days. That was the high on that huge up move on that day. And then since then, over the last 3 days, that's also been the high here. Now, can we break above it? Potentially we can. Where's our next upside target? Well, it would be this area here, so around 5,600 or so ahead of the April high. But I personally am not so convinced that we may actually reach that, because we're running out of steam here. Can you see the candles are getting shorter? And yes, we're trying to break through this downtrend line here, And you could argue today, probably we might actually close above it, but that might just be a downtrend line which needs to be redrawn before we come down again. So I don't know. For me, technically, I'd be quite cautious if I were to buy it here. If I were to do so, I would have a tight stop. If you have a wider stop, it would have to be at least below Thursday's low, which was made at 5,328 here, because that's the last reaction low if you intend to go long at these levels. For me, for the long term to be bullish again, we would have to take out the March high. And as you can see here, the March high again was made where the previous lows were made, going back to December of last year and January of this year. So this resistance area here is still very much intact. And that is the key level to watch out for a long-term bullish trend reversal in the S&P 500, in my opinion, when looking at the S&P from a technical perspective. And then I've got some more questions here. I think I've just been sent by the gallery. Lloyds Banking Group, when is Lloyds going to break 75p? Good question. Let's just look at Lloyds and see what the charts are saying. Now, obviously, I'm just glancing at these charts. Obviously, technical analysis take a little bit more time than just doing that in 3 or 4 minutes. So I'm just giving you a gist, and it's not a proper analysis of the chart. But you can see a lot of this on your own. I mean, we talked about Lloyds, I believe, 2 weeks ago, and we said, well, it could bounce here, and this is basically what has happened. Yes, we came down to the early April lows here. But in this case, this is just an ABC early wave correction to the downside in a long-term uptrend. You can see we've been grinding higher since then. We're now testing this key resistance area, which may still cap. It's possible, but that goes back to the early and late March highs. But if we were to take these out, which is also possible, and given the last advance we've seen so far, unless anything negative happens in the short term, this trend seems to be quite healthy, but we'll have to see what happens in the next few days around these levels. But if we were to take out these highs, then with regards to the longer term picture, if we go to a monthly chart, what we're also taking out is the highs going back to January 2018 and May 2017, which incidentally were more or less where the lows were for April to August of 2014. So all of which is a really important resistance area. If we manage to break through that on a daily and ideally a weekly chart closing basis on Friday of this week, we may well be heading back up again towards 80 and even the June 2015 high around 89. So that is a distinct possibility if we break through this resistance area. And you can see on the monthly chart, this hammer formation is potentially very bullish if we break through these resistance area just mentioned at the beginning of the next month and can actually continue to advance in May. Do I use stochastics in conjunction with the relative strength index? I personally no longer do so. I used to do so, but quite often you get similar signals. You can use also the MACD, the MACD, which is slightly slower than, for example, a 14-period stochastic, or in my case, a 9-period RSI, relative strength index. But let's just put the stochastics up here, and you can see that we have very similar patterns here. So this is the stochastic default setting that we have in IG, and you can see when we had a buy signal on the stochastic here, when the faster dashed line crossed above this, the slower when the faster solid black line crossed through the slower dashed red line here. That was our buy signal, and can you see that buy signal came slightly after my reversal to the upside on the RSI here, simply because I used the 9 periods, so a shorter time period. But you can see here we are now in overbought territory on the RSI. We are in overbought territory on the stochastics as well, above 80. So they are quite similar. You might get slightly earlier or later entry signals. Here, for example, when we went from the overbought zone down to the middle of this distribution between 0 and 100, what we saw is a slightly earlier signal here on the stochastics. Or actually, no, it's more or less similar. And they had also turned down. But here we became oversold, which we didn't do on the RSI, but it really depends on your settings. So yes, you can use the RSI in conjunction, but just be aware that you might get slightly earlier or later, depending on the settings you put in there, signals than your RSI, your MACD, or things like that. So you will get a similar approach, just different signals. But they can be quite interesting sometimes. So for example, here, can you see we made a slightly higher high in December than we did in April of 2019 on this monthly chart. That was on the Lloyd's share price. And if you go down, we can see on the RSI we made a higher high. We didn't have any divergence, but on the stochastics, we had a lower high here. That was lower than the previous high. That was telling us on the stochastics, at least, that potentially we could see a big reversal to the downside. And this is what happened with the Lloyd's share price afterwards. And you wouldn't have picked that up with the RSI. So basically what I'm saying is use what you're comfortable with. You can use each of these on their own, MACD, RSI, rate of change, for example, or stochastics, fast or slow stochastic, depending what you like. Or you can use a combination of them. But if you do a combination of them, be aware that they will all more or less give you similar signals at different time points based on what settings you set them at. Then do I have any other questions to do with any other markets? On the Teams, okay, I can't see it on my Teams. What are Yeah, I just did that. I just covered the stochastics with the RSI. The gallery clearly isn't listening to what I've just said, but it doesn't matter. What periods do I... Oh yeah, I didn't say that bit. You're right, sorry. What period do you recommend? It doesn't matter. You can backtest them. If you do that, you'll probably optimize them and the changes and this and that. Having said that, what I've been using for 30 years, but it's just my preference, it doesn't mean it's any better than anything else, is on the RSI. I use a 9-period RSI because I want an earlier signal than what most people look at when they look at the 14-period, which is a default setting. So I use a 9-period RSI. I use 1730 as overbought and oversold, unless the markets are really volatile, in which case I might, if you look at Tesla or something like that, for example, I would look at 80 and 20% for oversold 20 and overbought 80%, just because it's so volatile. But I use a 9-period, and that's my answer to your question. Otherwise, with regards to the moving averages, I use a 30-period moving average. I use a 55 instead of the 50. Most people use 50, but 55 because it's a Fibonacci number. And I use a 200, and that's all I use. But most importantly, what I try to understand is the actual price action. What is the price telling me? What is the price doing? What's happening here today? Are we gaining momentum? Are we losing momentum? Do we see any reversal pattern? Do we see a continuation pattern? Things like that. So I try to understand the price action, and then from there I try to gauge whether there's a high probability, low risk investment opportunity. So going back to the trade of the week, is this a high probability trade? We could be wrong, but I've got my resistance line being tested here, which now acts because of inverse polarity as resistance, the previous uptrend line here. I've got this key resistance area here with previous daily highs here, probably acting as quite a lot of resistance going forward. That together could mean, with this ABC potential pattern on the Elliott wave, that I've got 3 different reasons why the DAX might actually come off again. Now, if I'm wrong, where's my stop loss? As I said, if I place it up here, well, I'm risking what, 1,000 points? If I'm right and we go back down here, because if that's an ABC, we might actually make a new low. So I was quite conservative with my 20,000 target down here. But even if we drop towards 20,000, that's a over 2.3 reward to risk ratio. So that's what I'm trying to aim for every time, because as we know with Trade of the Week at the beginning of this year, I got 4 in a row wrong because we got stopped out very slightly and then I was right on the view, but that doesn't really matter. And then a lot of people stopped following me because, oh, he got 4 in a row wrong. Even though I've been saying that, the previous year we were up 31%, we had 2 periods where we got 4, even 5 in a row wrong. It just happens. But what's important is when you get it right, you then make more than you lose. So last week's trade, for example, when we went long on the DAX here, and if we got out today, for example, going short now, here we probably made about 4.2% in just one trade. And even if at the beginning of the year we were down, I think we were down 6.5% or something like that. So now we're back in positive territory, and we did that with 2 trades, basically. So it's all about reward to risk ratio. So just be aware of that. Another question here, do I factor forex into your technical analysis and as well? Well, I do analyze every morning for premium clients. They receive my professional technical analysis on FX. So of course I look at FX, I look at fixed income, I look at equities, at indices, at commodities. I look at intermarket analysis. So if a yield goes up, what happens to indices? What happens to the currency? Things like that. So you need to look at everything. But if you trade a certain market, for example, euro dollar, and that's your market, then yes, analyze it. If the volatility becomes greater, use, for example, this rule of 2 ATR, 2 average true ranges of 10 days. I'll show you very quickly before I wrap up how I do this. So ATR, that's this bit down here. If you don't know how to find it, basically just go in here on indicators. The second from the top is average true range. I set it to 10. And then I look at that number here. That tells me on average, that was a range of 497 points over the last 10 days on the DAX. But back here at the 10th of April, with this highly volatile period, the average true range was about 950 points. And if you want a stop loss, even if you trade intraday and short term, it's a good idea to have your ATR 2 ATR away, your stop loss. So you leave yourself enough room for that volatility to play out and not to get stopped out, because a lot of people place their stops far too close to the market, get stopped out, get frustrated because their view overall might have been wrong in the future or in the past, and therefore they don't want to use stop losses. I always use a stop loss, and I place it a lot of the time 2 ATR away from wherever the market's trading at the moment. On that note, I'll leave you for another week of hopefully very interesting trading, lots of data out. Have fun, enjoy yourselves. Be sure to use stop losses. Thank you. See you soon.